Ahoy there, traders. How are we all doing? Pop a yoo-hoo and a hello in the chat box. Let me know where you're at, where you're from, what you're up to. Just waiting for one or two people to step this way. Nonetheless, welcome one, welcome all. So this is quite possibly the last one I'll be doing this year. I can't believe it's December the 17th. So let's take a look at stocks, the stock markets. Let's look at some stocks in review. Generally, let's just take a look at is there anything interesting to look at, and certainly get prepared for quite literally next year. I'm not really looking for anything exciting. I might have a look at one or two stocks, one or two really short-term trades between now and the new year. But from a swing trade point of view, I think it's going to have to be, does it check the exceptional box? So we'll take a look at what that might look like. But usually the way that the stock market rolls about this time of year is we're going to have the first 2 weeks of December are usually pretty exciting. And then the latter 2 weeks from now onwards, then there's not a great deal that goes on. And there may be some pockets of activity, but most of the time it's not worth the effort. Anyway, I'm getting ahead of myself. We will get to that in a moment. So thank you, everyone. Adrian, Graham, Ian, Perry, hello. Peter, Randall, Rodrigo, Ruben, Steve. Hello, Steve. Got a new computer. You got some computer problems. I've seen your message. I just didn't have a chance to respond to your private message earlier. Nonetheless, welcome. So if you are new to these sessions, they go up to about 60 minutes. Occasionally, I laugh at myself when I say this, occasionally they go over. If you know me, they always go over. But it's going to be at least 60 minutes. I'm going to spend 2 minutes just saying who I am. I'm not going to spend hours doing it. Just so that you know who I am, where I'm at, and basically what qualifies me to stand here and talk about charts and what we're doing. We're going to go over the stock market, as I said. I'm going to spend most of our time looking through the charts this week just to finish the year off and basically see if there's anything that's interesting for us to trade. The way to get maximum value from today's session is to interact, comment, like, share. We're going to spend most of the time looking at charts this week. So if you've got a chart you want me to look at, if you want a second pair of eyes to rove over it, feel free to pop them in the chat box. And if you're watching this on the replay, pop them in the comments, and I'll probably do them on the next live session that we do. As always, if you've got questions, pop a comment below. And as soon as I see it, if it's relevant at that moment, I'll deal with it in the moment. So my name is Phil Newton. I'm a trader first. I say that always because it's true. I'm a trader first and I'm a mentor second. For many people, it's the way around. I think it's an important distinction. Many people are mentors first. They don't actually trade, which is a little bit of a counterintuitive. So I like to say I'm a trader first. It's the truth. And I really enjoy helping people get a leg up on this stock market thing. For over 20 years now, I've been helping regular folks become better traders and get profitable, in this case, swing trading results. And I've pretty much done everything from day trading, stocks, options, futures, Forex, all the way through to swing trading. The only thing I don't really do is investing. So if you're looking for investing approach, like a Warren Buffett style of thing, then this is definitely the wrong place for you. I don't focus on that. My style of trading these days is like to get paid at the end of the month. So really swing trades that last for 3 to 6 weeks is where I'm at, with occasional short term, maybe a day trade, maybe a 3-4 day swing trade. It depends on the chart. And that's more like the cherry on the top of everything that I do. It's not really critical for what I do. Nevertheless, it's the same principles that I use, just a different time frame. You're probably gathering I'm not a Wall Street guru, just a regular guy who likes to have fun and tries to give back to the trading community as much as possible with these Friday sessions. I refer to my system as a production line, and I spend most of my time trying to remove the discretion. I'll illustrate that later as well. The latest version of what I'm doing, all the principles are the same, but it's just trying to mechanize the decision-making process so that it's repeatable, replicatable, just like a production line. What I try and do is to, again, provide some value, mentor you in some small way. And if you do want to work with you in a more official capacity, then we can talk about that later. I've helped quite a few people over the days, weeks, months, years. Just like Emily, just like Steve, just like Anik, just like Joe, just like Kyle, and quite literally lots of people who get results using the systems and procedures that I use. Again, I could always talk about the trades that I make, but it's the trades that my students make that give me the most satisfaction. Anyway, that's me. I love a good read, a ramble. I like working out. I like having fun. And I've got a strange affinity for flamingos. I don't know why. Those silly little buggers just amuse me. Anyway, it's production line trading. That's what we're going to go through. We're going to hit the charts right now. And we're going to get into it. As I mentioned just a moment ago, if you do want to work with me in a more official capacity, we can talk about that later. Again, there's no arm twisting. Many people get a lot from the free Friday sessions, but if you do want to know the exact system, the rules, the procedures, get access to the chart assistance that's just been, my lovely and adoring coder person has just coded up for me to make my life a lot easier. And that's just been released, or the latest version of it has. Anyway, it's all revolving around production line trading. It is 3 elements. The mechanical assessments, we're going to spend some time looking at that. Visual confirmation. I always like to do this. From the automation parts, the visual confirmation is not needed, but sometimes we can just override it. And again, we've got a simple rule decision. Again, the reason why it's not coded in is just I just don't know how to describe it to the programmer. It's simple as that. I'm just a poor farm boy, figured a few things out. But I have people do that. So just the next stage is to how do we evaluate the kind of some of the visual elements. Again, it's not really critical. The results are amazing without it, but sometimes it just makes sense to have the occasional override. So I'm trying to, again, the next iteration of what we're doing is to get the visual confirmation, see if we can codify that part. And we've done it from a human perspective. Again, I like to think about it more like quality control. So again, mechanical assessments, we've got a strategy that works. We're looking for 6 money-making blueprints. We just want to make sure that what we're expecting to see in the first step is what we're seeing in the second step. That's really what we're doing. Again, think about it like quality control in a factory. And then when we're happy with the trade, we're going to be putting our entries, exits, stops, and targets. Again, the latest version of what I'm doing, that's actually worked out for you automatically now. So you don't have to do it manually anymore, which is great news. Some of you will be getting that rolled out. It's already in the members area, in the community area, if you're already with the program. So that is again working for us quite nicely. So with that said, let's go and jump at the charts. I can see people just logging in. You're late. Where have you been? First and foremost, I'm only joking. So I see 1 or 2 people. Hello, John. Hello, Suleiman. That's it. I think everyone's here. Now I just saw the list expanding contract on my other monitor. Anyway, let's hit the charts. Let's go and find something to trade. So the first thing that I'm doing, first, I'm not panicking about this thing that's going on. As usual, I'm always drawn to what's going on in the overnight markets. There's a little bit of excitement, a little bit of activity, but when you put it into perspective and you look at the actual charts, it's up a day, it's down a day. It's not really any different to where it was this time last week. Been expecting a little bit of excitement. I actually thought we'd see a new all-time high, maybe up to about 4,800. It literally pinged a new all-time high and then quite literally retreated just as quick. So not really seeing the follow-through that we might have thought. This is probably a good example. Again, we mentioned this last week where and again, I mentioned earlier and last week and the week before, as I recall. But usually the way December rolls, December is usually a little bit of excitement, maybe a continuation of the trend. We obviously saw the sell-off in the end of November. We saw the rally in the beginning of December. So that's possibly the excitement. So what we're seeing now is the up a day, down a day, sideways. That's normally what happens in the last 2 weeks. Again, if you think about why these things happen, the people with money, when I say people, it's the institutional traders that generally do move and influence the markets on a regular basis. They want to lock in their bonuses. They want to lock in their commissions. They want to tidy up portfolios. They're just getting ready for the year-end accounting. That's essentially what's going on. So we generally see a flurry of activity in the markets and individual trade opportunities that may have been good performers all year. There'll be a little bit of yo-yoing up and down as the institutional traders unwind their positions and tidy up portfolios. cap off some profits, maybe chop some of the losses, etc., etc. So that's essentially what we're seeing right now, and maybe a little bit of hedging going into the year end again, just to lock in those year end profits. That's usually what's going on here. So it's just like any other office environment. If you think about it, and those, no one really wants to put any extra risk on board. They don't want to sacrifice the potential gains for the bonuses that they're going to get. So that's really the conspiracy theory behind flurry of activity in the first 2 weeks, and quite literally the markets stop. Now, exceptions to every rule always, and we are seeing increased volatility. So maybe this year we're going to see some heightened pockets of opportunity. I don't think we're going to see roaring trends. You're going to start hearing things like from the media, the Santa rally, which makes my eyes roll. I don't think it's anything that, I mean, if you actually look at the statistics of the Santa rally, you can pretty much Google these things. There's only it's a 5-day period between Christmas and New Year is officially where the Santa rally is measured, and it's hardly tradable. So don't believe the media. It's not all of December. It's not on the run up. It's just a very small, usually 3 to 5 day period that is considered, this is when the Santa rally happens. So we'll find out in the new year. So don't worry about it right now. As always, trade your strategy. So we're seeing a little bit of heightened activity. I'm looking at the watch list on the left. Let me just highlight it again. Over here on the left, and just looking at the percentages. So we've got a little bit of a mixed bag, you know, down a percentage, 0.5%. The VIX was not really moving. Now it's up 8%. You know, it's a little bit of a mixed bag. So what I like to try, it really just highlights what we were just saying. So what I tend to do is like, what is the chart doing? It's not really doing anything. If we just think it's bobbling around between the 4,700 level and the 4,600 level, it's still a wide range. So there is an increase in volatility there. What I mean by that is price volatility, that the range of movement is expanding, but then it's been doing that all year. And that might just suggest, or maybe not necessarily confirm, but might suggest that we are seeing what I was describing. What would normally happen this time of year is the unwinding of positions, you know, the institutional locking in profits. And that's what we're seeing here. The other thing to factor in as well is I was reading some statistics that there is an increase in retail traders. I don't think we can discount the power of the retail trader collectively at the moment. I usually don't pay that much attention, but they do represent about 35, 37% of the liquidity in the markets, which is significantly higher than 3, 4, 5 years ago. Obviously, the retail trader has a little bit more power collectively than previously. So there may be some pockets of opportunity, as always, that might be a little bit more longer lasting. So we could see some good moves from time to time. Again, is it worth sitting at the computer all day, every day, hoping that there's going to be a trade on Christmas Eve? Go to the party that you were going. You know, don't worry about the markets. They're certainly going to be here, in the new year. So, you know, if you're struggling to find a trade over Christmas, like, don't worry about it. You know, come back over in the new year. Anyway, so let's think about the S&P. So what's going on here? There has been. Price is just coming back below the 20-period moving average. Again, this is the 50-period moving average, and this is the 200-period moving average. This is still the S&P, ES futures. So we're coming back below the 20-period. And one of the things that we might want to do, again, if I just highlight, in fact, the 20-period moving average here for a moment, and the 50-period, where it's obviously trending right there. What I'm typically looking for is when price is above the 200, above the 50, and above the 20. And I'm trying to capture and profit from those times where it's above the, all three moving averages. I'm looking for trending price behavior most of the time. So we can quite easily capture those profitable pockets of trending price activity. That's what, as swing traders, I'm trying to do. That's one of the money-making patterns that I teach. It's the easiest one. It's the one that we are looking for most times. So now that price is coming back below the 20-period moving average, it's not behaving in a trending fashion. So last week, a new buy opportunity was highlighted, but then this week, it's pretty much voided itself quite quickly. So the market as a whole is just saying, I'm not ready trending. So usually when we see a new a new bullish signal highlights, we want to see price trending quite quickly. If you think about the times where price goes above the 20, above the 50, when it comes back below and it goes back above, we want to see it trend quite nicely. And we're just not seeing it, move higher straight away. So when it comes back below the 20 over here, we want to see it accelerate away. We'll usually see it accelerate away for a couple of weeks, retraces below the 20 and the 50, accelerates away. So that's what we're looking for. That's what we'd consider trending price activity. Again, when it comes back below the 50, in this case, stays below, consolidates below, and then when it goes back above, accelerates away. So what I'm trying to highlight is that's what's different over here. It has gone above, reacted off our 50, above the 20, but it's just not accelerating away. So that's just, again, for me, highlighting that maybe the year's done with. It's just, that's all I'm trying to kind of surmise from comparing what's happening right now to, what's been happening, for most of the year. And it's really obvious when you put that into context on the S&P. Similar viewpoint on the Dow. We're already starting to see price slow down and move into this sideways consolidation. It is still technically above the 20, above the 50, above the 200, but we've already established that price is meandering. We've got multiple crosses in the 20 and the 50 period moving average to highlight a consolidation. So we already know that it's in a non-trending state. So we can't make the same evaluation. Now, let me just pause there. On the S&P, trending. On the Dow, highly correlated instruments, but the behavior is different. It's already established using the moving average to evaluate, is it trending? Well, yes, it looks like it's going up. Visually, it looks like it's going up, but our mechanical assessments for a consolidation is the 20 and the 50 period moving average crossing multiple times in a relatively flat level, the same price point essentially, and maybe in a very short space of time. So the evaluation that we're making here is, well, it's in a consolidation. It's already established. So it's non-trending. So I can't use the same moving average evaluation for, we should be seeing trending. We should be seeing price accelerate away. Does that kind of resonate, folks? Just give me you understand the distinction that I'm trying to make. Just help me out that I articulated that. Awesome, Glenn. Thanks very much. Quick drink to clear the throat. Perfect. Thank you for the comments. So again, just a subtle distinction. And again, we can use those moving averages in the same way. So again, S&P, obviously trending. Start at the bottom left, finish at the top right. The average prices are separate from each other. The Dow, just to underscore the points, again, looks on face value similar, but the clues are the moving averages. The 20 and the 50 is a flipping and a flopping, and I'm looking for at least 3 flips and flops. At that point, I'm starting to question, is it trending? Well, now I know that. Again, I can start thinking about this area as a consolidation. On the Uncle Russell, it's already consolidating. We established this earlier this year. We got super excited for a breakout. It's back in the range. It's at the low end of the range. And again, multiple crosses in our average price. At that point, we were making the same evaluation. And again, although we had the breakout, it doesn't mean that it's starting to trend again. So an attempted breakout, we got excited. We're looking for price to stay above the range high, as you recall, and it retreated. I didn't think this would happen again. Just goes to show what opinions matter for. They matter for nothing. But price is in the range. It went from the high of the range to the low range. We've got to presume it's going to go from the low of the range to the high of the range, because that's what this trend looks like. In this case, it's a consolidation. It's highly tradable. You can go and look at things like Netflix, Nvidia earlier this year. You can go and look at, what was the other one? Slips of mind, doesn't matter. But we've got lots of stocks that have the same pattern again. We can trade them from the low to the high to the low, and trades the smaller trend, the smaller fluctuation in the context of this confinement. You can sell range highs, buy range lows, sell range highs, buy range lows, all day long, every day. So Russell is in a consolidation. Definitely, I don't think anyone's in dispute. I think when we go back to the Dow for a moment, I think because we've got this rising high, we might be mistaken, if you like, for calling it a a trend still, because it's still finished at the bottom left, still making higher highs, but we've just got this expanding volatility pattern. The Nasdaq is, again, is in a rising channel. Now, this is one of those interesting. I wanted to finish on the Nasdaq. This is one of those interesting paradigms where we've got a index in this case doing two things at the same time. Firstly, it is trending. It starts at the bottom left, it finishes at the top right. The moving averages are stacked in the same way as the S&P has been. However, we've got a very clear multiple touch boundary of the low. Again, 3 is the magic number for me. We've got multiple touches of the lows that makes it really obvious. So I can take that and draw a parallel trend line, which is what we did a few weeks ago, well, a few months ago now. So we can connect the highs in the same or a similar way. So we've got this rising channel. And certainly in my experience, the two states are in conflict. It's both trending and consolidating because it's contained. So if price was trending, we probably wouldn't have this containment. And again, I think many people would still call this a trending chart, and accurately so, it is moving upwards. But at the same time, it's got a containment. It's got a defined, well-defined lower boundary and a well-defined upper boundary. So we've got to call it a range at the same time, or a consolidation. So I can trade it in the same way. So I can buy range lows, sell range highs. So I could be bearish here legitimately and not be considered counter trend because it's in a consolidation. And I can target the boundary low because price has been doing that or making that behavior most of the year now. So we've got this rising channel. It's also trending. So how I deal with this, as you probably just gathered, I don't call it a trend, and I default to calling it a consolidation. Now, I also like to, when there's a direction, excuse me, to these, excuse me, to the consolidation, instead of buying range lows and selling range highs, what I also like to do from time to time is, if it is obvious that it's going up, in this case it's an uptrend, is I'll buy range lows, but buy the break of range highs again, and not worry about what could be counter trend. It really comes down to what your preference is. Again, personally, I don't like trading counter trend most of the time, but it would be okay because it's in a consolidation. We can sell range highs if we choose to, especially if we're looking for some bearish exposure. So we don't have to trade against the grain like on the S&P. If I was to do the same or similar trade on the S&P, if I thought the market was selling off, it would obviously be counter trend because it's in an uptrend. The only distinction I'm trying to draw here is I don't like trading counter trend. Again, for me personally, I'm looking for 6 patterns. One of them is an uptrend. The second one is a downtrend. And consolidation, there's 4 things that I can do. When we know that price is consolidating, I can sell range highs, buy range lows, buy the break of range highs, and the break of range lows. So there's 6 patterns there. The other 2 are counter trends. So if we're in an uptrend, I can basically be counter trend on the uptrend. So, sell the rally essentially, and I can buy the sell-off in a bearish counter trend. So there are 8 directions that we can look for. I just prefer not to trade counter trend. So this is kind of like my little cheat around it. So when we have the rising channel, it is still consolidating. There's one of the money-making blueprints that we use. So if I want to get some bearish exposure, because we're at that upper channel, the upper consolidation, it would be okay to trade counter trend. And again, just from my personality viewpoints, it makes it acceptable. Does that make sense? Everyone happy with that kind of logic? There's no right or wrong. If you're happy, if you're happy trading counter trend, go for it. Personally, it doesn't sit well with my personality. I think this is just a rambling sidebar. It's an important thing to try and consider as a trader, to understand what are you happy with. Some people don't like trading the trend. Some people don't like trading counter trend. Some people don't like trading ranges. I spent 12 years, for example, just trading breakouts. So understanding what you want as a trader is going to help you figure out which is the right thing for you. I like to trade 6 of the 8 trends that we could. And again, the first few that I just mentioned there. So the Nasdaq doing two things. It's both trending and consolidating at the same time. And that's generally how I like to deal with it. So I think the market's not doing anything great, anything spectacular. I would be hyper cautious. Again, just zoom in slightly. I'll be hyper cautious. It is in the very short term managing sideways. The S&P is reverting to a non-trending state. The Dow's already in a non-trending state. The Nasdaq is reacting, or certainly in the last few weeks, not trending. It's pushing away from the upper boundary, and the Russell's definitely not trending. It's in its consolidation. So I'd have to, again, also take time of the year into account. Just consider, if you are going to take trades on over this last few weeks of the year, question your judgments. Why are we doing it? Is it critical that you do it? If you're looking for trending setups, why? Maybe we look for short-term non-trending opportunities, and it could just be trade the range. Or if you are going to trade those smaller 2-3 day trends, maybe would be wise to drop down to lower time frames if you have the choice to. I think ultimately, don't force the trade this time of year is always going to be the best practice. I'm not seeing the environment to be excited about new trading opportunities just because of all the reasons that I've mentioned. It's not looking great out there. So if it's not an exceptional trade as you see things, again, I wouldn't worry about it. I wouldn't spend hours looking for a trading opportunity again at this time of year. So market conditions, not great. Not expecting them to be great. If you are going to trade, keep it on a tight leash. Look for the smaller moves. Again, and don't hope to swing for the fence and get a home run with those trades. It's just not the environment, and certainly not the time of the year. Plus, it's not really the environment at the moment to be thinking about that. Anyway, with that said, a very quick show and tell. Just bear with me. Okay, so last week and the week before, we went through the latest update of what I lovingly refer to as the algorithm, and the latest version of the strategy. So that the trending strategy that I've just described that tries to capture those trades that are above the 20, above the 50, above the 200, that phenomenon that we have there has been coded up. I've got a lovely algorithm that will work it all out for you. We've looked at performance. So just buying the dip in an uptrend, for example, and selling the rally in a downtrend without any discretion. We've got it coded up again on Apple without compounding. We've got a lovely equity curve. And again, the performance stats, again, TradeStation works all out for me. But again, it's all coded up, so it looks amazing. So the latest update is it's actually as well as plotting the trades from a strategy point of view. We've got these horizontal lines now that's going to work out your entry, a potential stop loss, and obviously a potential target. And these little yellow dots are points of trade management. So if we don't get the target, we can manage the trade quite literally in the same way that we just described. We want to see price stay above the moving averages and basically stay stacked so we can get that trade on. So we've got the last trade on Apple. It was just a few weeks ago. I've got to admit, just me personally, I bailed out right there. I didn't get the full opportunity of the trade. Again, I normally have a little bit more of a conservative target, but the algorithm's working out the optimal point for me. And again, you can see that it's just reached its target quite nicely. And unsurprisingly, it's selling off with the markets. So let's think about trading opportunities. Let's go through the stock list. Let's find again, start up Apple with my analysis. Maybe you can start to see why. Again, I took the same. Oh, where's my drawing? There we go. So I took the same trade there. Target. I saw this as a rising channel, just like the Nasdaq. Without that, you've got the exit there. Anyway, thinking about trending, we've got price. There's the 20. There's the 50. There's the 200. So I want to see a buyable dip is what I'm looking for. So from a classic trend trading viewpoint, it's going up. It's currently above the 20, above the 50, above the 200. So we've got the mechanical direction is good, but right now we're in a rally in an uptrend. And yeah, we've got a few red days right now. It is dipping, but I want to quantify a buyable dip as between the 20 and the 50 period moving average. So right now we're in waiting mode on Apple. So I don't need to take any action right now for a new trade opportunity. And I think that's also an important distinction to make as well. Just because you see a few red days doesn't mean that it's a dip worth buying. So I'm trying to quantify at every juncture what a buyable dip is. We want to see a trend first so that we can start thinking about dipping or buying a dip in an uptrend. But on top of that, we're also trying to say it needs to dip sufficiently enough. The first point of reference is going to be the 20. If it comes as low as the 50 period moving average, then I can be definitely in the sweet spot of that buyable dip. So that means that right now, because price is above, it's just being closed for profitable exits. I don't need to worry about it right this second. Let's check out the next one on my curated list. Again, I'm only looking at a few stocks here. So these are my best performing stocks. I want to trade a small basket of stocks with consistently. So again, feel free to swipe those from me. I don't need to trade everything every day, all of the time, because you will miss every trade that you could possibly place because you're looking at too many. If you think about the way that the banks, the institutions, the hedge funds, the long-term successful market participants, they're not scanning the thousands of stocks that are out there. They're focusing on a small basket of opportunities and trading with consistency. So that's what I'm trying to do. So coming over to ADS, the average price has crossed over. That's our mechanical trend right there. It's been in that trend for at least 20 days, which is great. It has done. And but now visually, what do we see? We've got the 20 period moving average is a flipping and a flopping. Visually, we can see a consolidation. So I'm just going to wait for essentially a breakout. So my average prices are saying bearish trend. However, this is why we have the visual inspection step. Just because I've got a mechanical evaluation. Cheers, Glenn. Thanks for the reminder. ADS, this is. Glenn's just asking to pop the watermark on so we know what the stocks are. I always forget. I find it annoying personally, so I just always remove it. There we go, ADS. So we've got a mechanical direction trend. And again, we can sell the rally in a downtrend at this point. However, the visual inspection is, well, while that's happening, we've got a multiple touches the lows. We've got our 20 period moving averages, a flipping and a flopping, as we've just said. So visually, we can see actually we've got this temporary consolidation. It's still tradable, but all it means is maybe I just wait for price to be outside that consolidation before I consider it trending. So that's what I'm going to wait for. It's doing it right now, so no big deal. There's no action for me to take just yet. And just so you know, a sellable bearish trade would be the first pullback after the breakout. That's what I'll be looking for. So first pullback after the breakout. That's what I would be waiting for. Will be waiting for. Again, it's going to take several days. Again, we don't need to worry about it today, but nonetheless, that is potential candidates. BHC, we've already covered this in the past. There's what it looks like kind of afterwards. We have the same situation on BHC. You've got the sell-off right there. You've got the rally in a downtrend. Then now we can resume the trending behavior, the selling the rally in a downtrend, in this case, after the breakouts. That's what we'd want to see on the previous charts, just so you can see kind of like that before and after. Let me just go back and forth so you can see. So we've got, sorry, I skipped one. ADS, same type of price behavior is unfolding. Average prices have crossed over. We've got a consolidation. So there's the before shots. And then BHC is the after shot. So you can see the same picture there, just fast forwarded a few days. So sell the rally in a downtrend. BBWI. So BBWI, Bath and Body Works. Again, lovely trend here. Moving averages are stacked. This is what a trend looks like. Starts at the bottom left, finishes at the top right. The average prices are crossed over. They're stacked, essentially. So we've got mechanical trend. We've got a visual trend. I don't think anyone's in disagreement that this is an uptrend. So what are we going to do with it? We're going to buy the dip. Great. Now I know what the trend is. I know what to look for. I know how to think about planning a trade choice on this. So when I look at the detail, I can see the 20 there, I can see the 50 there, and the 200 is there. So right now, prices below the 50, it's in a buyable dip. But now what I need to see is price go back above the 50-period moving average. Now you notice that just because price is dipping in the context of a trend, it doesn't mean that this is an automatic buy alert or buy signal or whatever phraseology that you want to use. It's just at a location that is super interesting. This is officially a buyable dip. So what I want to see, again, let's just mark it off. There's the 50-period moving average right there. When price turns around, that will be my dip buying opportunity. So we have a buyable dip, but it's not the dip buying opportunity. Sorry, I'm playing with words this week. So as it turns around, then that's when I want to be involved. I'm not buying or trying to catch a falling knife is how it's phrased. I'm not trying to buy it on the way down. I'm trying to buy it as it's turned around after dipping. Now, there's still no guarantee it will work. I can't guarantee that. No one can guarantee that for you. But what I do know is the stats. Again, if we want to take a look at the numbers, if we just wait for that occurrence to happen, let's throw the algorithm on the charts and let's see what it looks like. So if you just bought so we've got the same thing there. Got the same trade there. We want to be buying as price goes above our moving averages. So it's below the moving averages right now. We want to wait for it to turn around right there. And let's see what the algorithm would have done even. So what I get to do is I get to validate, like, is this a good strategy for this stock? Should I be buying the dip on a regular basis? And there we go. It's a lovely, equity curve. Again, this is over a 20-year period. If I just do what I've described to you and buy the dip in an uptrend, I refer to this as the classic trend or my version of a classic trend trading strategy, then it produces a nice, steady equity curve. I've got good performance. I've got a good win rate. As I said last week, the win rate is not the be all and the end all. Does it make money? Yes, it does. Does it make money on a regular? Am I making more than I'm losing? Yes, that's what this profit factor is. You put $1 in, you get $1.60 out. You put if you just wanted to trade long only, you put $1 in, you get $2 out on average. The realized win-lose, if you like. So it's a good strategy for the stock is all I'm trying to get to. So we don't have to take my word for it. It's not just Phil saying this is a good opportunity. This is what we should do. It is quite literally quantifiable. As price turns around, that's when I'm going to be buying my opportunity. CLF. This is Cleveland Cliffs. I had some great trades on this for most of this year. So we can see that on the left and going up to the right, it looks like it's trending. However, as we look at the detail, we've got the 20 crossing the 50 there, 20 crossing the 50 there, the 20 crossing the 50 there. So it's flipping and a flopping at least 3 times at a relatively horizontal and virtually no vertical space between them. That's not trending behavior. Let me pause there. This is a nice, simple, mechanical use of trending tools to find a non-trending environment. Let me pause there. If you can do this, this is going to keep you out of shitty stocks that aren't really trending, because we don't want to trade a trending strategy on a non-trending stock. So that's what I'm looking at here. It looks like it's trending, but as we look at the detail, and all I'm doing is looking at the 20 over the 50, looking back over a relatively short space of time and seeing, actually, this looks like it's a mechanical range. So I've got to question, like, in the short term, is price transitioning from trending to non-trending? Is it going from a strong trend on the left side of the charts to a short-term consolidation? I can't question it now because the average prices are a flipping and a flopping. So that's what I've marked off already. We've got the box marked off. Don't worry about the specifics. Just note that price is in a consolidation. Great. All I've done is put a giant rectangle around it. So now that I know that price is not trending, I can essentially ignore the moving averages. So what am I going to be looking for this trade? Note that price is in the range. It's at the range low. Great. That's one of my great locations. And I'm looking to be a buyer at the range low. That's one of my 6 money-making patterns. And I now know what the trend is, or specifically that it's non-trending. I now know the location of price in the range. It's at the range low. Great. It's not doing anything new. It's not breaking out. It's certainly not above it. It's not below it. It's in the range. So I've got to presume that the trend, or the non-trend in this case, will continue until something new happens. That's the whole philosophy of any charting strategy, any charting methodology. It doesn't matter what tools that we use. We've got to presume the same thing or a similar thing will happen again based on history repeating itself. So we know what history is doing. History is telling us that it is in a consolidation as per the definitions that we've put on the charts. So where is price in that context? It's at the range low. Great. I've got to be bullish. Am I going to automatically buy at the range low? No, I'm not. I'm going to look for an entry. So my pattern is to look for a lovely little V-shaped pattern right there. Can everyone see that? Of course you can. If it helps pop the line chart on, I'm going to be bullish as price goes above the apex, so about 2150, somewhere around there, maybe as high as 2200. Great. So now the next question is, thinking about a trading opportunity, is there enough opportunity for me to trade? So my target conveniently is going to be the range high. Why? Because prices oscillating in that zone. That's why we drew the square on. So I can potentially profit from about $21.50. Let's call it 22 just for simplicity. So from $22 all the way up to $26. Would you be happy with a $4 move on a $20 stock? That looks interesting. Am I going to do anything today? No. Am I going to do anything tomorrow? Maybe. If price goes above $22, that's going to be my entry trigger. So just because it's at a good location, just because price is in a trend, doesn't mean, or in this case, at the range low, does not make it an automatic buy. We've got to still wait for conditions. In this case, I like to look for trigger points. At what points would I be happy to take the trade? At that point, $22, there's no reason for me not to take the trade now. But I want to, like with the trend, I want to wait for price to turn around and prove that it's moving higher first before I take action. That last part makes sense, folks. Give me a hell yes, that makes sense, Phil. And if it doesn't, well, let me know that as well. But does that make sense? Does it resonate? Does it ring true? Waiting for the right moments is more important than recognizing what the trade is. If you do the second one always, you'll naturally have the first one. But if you try and do the first one and just try to get in the trade, you'll have less success essentially. Awesome. Thanks, Graham. Right. What else we got? So I think out of everything that we've seen so far, when I used to, I wrote a newsletter and sent out daily stock alerts on a regular basis. These days I give them away for free. But when I did charge people for it, and we've looked at half a dozen stocks so far, and how would I determine which was the best one? I would just ask myself questions. I like to try and take the Socratic approach and ask questions a lot, of myself usually. So we've looked at 3 or 4 stocks that look interesting. But if I had to place a trade today without waiting for that trigger that I mentioned, which one looks the best? I think so far, of everything we've seen, I think CLF for me looks most interesting. And maybe I'm a little bit biased because I did spend 12 years just trading this pattern. So I think that's why I'm drawn to it a little bit more. I think ultimately what I'm trying to say is, which is the most obvious setup that you see? Doesn't matter what I see. I know what I'm looking for. But at your level of trading, what are you looking for? So when we think about trading and looking for opportunities, We want to be very precise in what we're looking for. And hopefully that's what you should be taking away, not necessarily, look at Phil, look at how he's analyzing the charts. That's not so important to me these days. It's just the lens that I'm looking through has structure. It has rules. It is defined. I'm looking for 6 blueprints, 6 patterns. The main one is the classic trend. I'm predominantly a swing trader, momentum trader. I can find momentum and trades in trends. We find usually them quite strong. We find slower momentum in ranges, so we can still trade them. They're usually not usually, sometimes just a little bit slower, but nonetheless, we can still profit from them. So I know exactly what I'm looking for. Let me just recap. Let me recap what I'm looking for. I'm just the chart area is intentionally on purpose. It's blank. I'm looking for an uptrend. That's number 1. Number 2 is a downtrend. Number 3, 4, 5, and 6, they're all interrelated, but we want to find a consolidation first. So when you know that price is in a consolidation, I can buy range lows, I can sell range highs, I can buy the break of range highs, or I can sell the break of range lows. They're the 6 patterns that I'm looking for on a regular basis. So whenever I'm looking at a chart, hopefully what you should have seen so far is that's what we're looking for. Is it trending up or down? Yes or no? Socratic question. It's closed. Is it there? Yes or no? Do I have a consolidation? Yes or no? Well, we've got average prices crossing 3 times was one of our mechanical evaluations. There's no ambiguity in that. You can apply that today. The 20 and the 50 crossing 3 times in a relatively horizontal or virtually no vertical distance. Then we've got a mechanical consolidation. Great. Just put a big box around it. Don't worry about the specific. Don't worry about the pennies. Just recognize the trend. If only you take one thing away from anything that I'm saying today or any of these sessions, is whatever strategy that you're applying is do this first. What is the trend? It's a statement. It's only going to be one thing. One of these money-making patterns. You do that first. Whatever you do next becomes easier, because if you recognize that the trend is up, great. There's 2 things that you can do. Firstly, I like to buy the dip. That's what I typically look for. That's what I like to do. But if you like counter trend trading, some of my students do, they love counter trend trading, then you need to know the trend first before you can counter trend. It's important to know which way the money flow is going so that it helps you know what to do next. So 6 money maker patterns. So now that's what I'm looking for. Great. We're looking at Domino's Pizza. So what is the trend? The average prices are stacked. Look at it. There's the 50. There's the 20. There's the 200. Let me do that again. There's the 200. There's the 50. There's the 20. The trend is up. We've got a mechanical evaluation of the trend. Visually, the trend is also going up. It starts at the bottom left, it finishes at the top right. So we've got mechanical trend, visual trend. Cool. Everything looks cool and groovy. What should I be doing? Buying the dip. It's a statement. No one's in any confusion over what we should be doing or what I should be doing. Obviously, I can't tell you what to do. I would love to be able to do that. I'm not a financial advisor. Please seek blah, 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 etc., etc. Take your own responsibilities for your own money. I've got to put that in, folks. But be responsible. But it's going to be easier to find an opportunity when you know what the trend is. You're going to be on the right side of the money flow. So now that I know this, you want to see a trader got marked up. We spoke about this one in real time. As price went above the 50-period moving average, that was my risk, that was my reward, and everything was cool and groovy. We've got the same thing or a similar thing happening again. It's dipped, it's come below the 20-period moving average. It's going back above the 20-period moving average. So as price turns around, then I'm looking for a continuation in price. Cool. There's your buyable dip. That's what it looks like. Wait for price to turn around. Now then, Halliburton. What's it doing? Multiple crosses in our average price. Great. So we've got a mechanical evaluation to say that maybe it's not trending. So a non-trending, so put a box around it. You can put it horizontal. I saw this as slightly angled, multiple touches of the lows. Great. So maybe you can just about sit shaded. We talked about that in real time, a bearish trade. It's at the range lows until something new happens. I've got to presume the same thing's going to happen again. The same thing being it goes to the boundary high because it's been doing that all bloody year. So it should be pretty straightforward. Now, will I make money on this trade? I don't know. I'm not going to blow wind in your sails to say that it's going to work every time because it doesn't. But you know what? Let's think about it. How often do I need to be right? Well, let's just throw the algo on. And I've posed a question. I want to know myself. I don't have to be right every time. I just need to be right on average. This is what gives me confidence in every trade. This is why I'm trading just a small basket of opportunities. It can be, 5 stocks, 10 stocks, 50 stocks, whatever you consider a small basket, but trade them consistently. I don't know if this one's going to be the one that works out. The last several have been great. I've made loads of money from them. Maybe this is the one that loses me money. I've got to be okay with that because making money in any business is not a straight line affair. If it was, we'd all be doing this. So we've got to be okay with the losses, the rough with the smooth. Keep your risks small, trade a strategy on a basket of stocks with consistency, and you'll get results. So the question was, I don't have to be right all the time? Well, according to this, I'm right a little better than half the time. Great. It's not just about the win rate. Remember, don't fall into that fallacy. Does this make money? Yeah, it does all right. Dollar in, $1.40 out. Cool. Happy with that. It's not the best performing stock, but it's one of the best performers. I think I'm okay with that. Great. That gives me confidence to firstly sleep at night and to put this trade on. I've got a strategy that works. I'm going to use it. So it's not about being right every time, as we said last week. I've just got to apply the strategy with consistency so that I'm right on average. And again, I'm looking at the markets. I'm looking at the charts through a lens that hopefully is consistent every single time. Now, obviously, I know it upside down backwards, but we've got a mechanical evaluation to work these things out. So we're at guess what? We're at the range low. Price is ranging. I've got to be bullish at the range low. It's not doing anything new. It's not outside the range. There's nothing to panic about. The trade is in the hand of the stock market gods. I've got to let it play out. Jeffrey's Financials, one of my favorites. What's the chart doing, folks? You tell me. Let's play a quick game of audience participation. What is the trend? Is it going up, down, or sideways? Answers on a postcard. Answers on a pigeon. Fax it in. Up, absolutely, Rodrigo. So what should I be doing? Now, we know it's up. Mechanically, the averages are stacked. Let's look at the details. Look at the 20 and the 50, or the 20 and the 50 are also stacked. It's crossed there. So it is trending. We've not got multiple crosses in the 20 and the 50, so we know it's not in a short-term consolidation, or it's not transitioning like it did over here. So it is in a trend. Now, note the way I'm saying this. It is in a trend. It is a statement of fact. We are all in agreement. Cool. Now we know what to do next. Buy the dip. So how are we going to quantify it? Price below the 20, below the 50 period moving average. It's, again, below the 50. Great. So I've got a buyable dip in the context of an uptrend. It doesn't mean that it's an automatic buy. This is a mistake that most novice traders make. You see them on all the public forums going, oh, diamond hands, baby. Buy the dip, and it's not a buyable. So we've got a buyable dip. The next phase, and you can see the crosshairs, is to wait for it to turn around. Just for ease, let's call it $40. If or when price goes above $40, I will be buying the dip. I found a buyable dip. Now, if it goes back above $40, it will be moving higher in the context of an uptrend from a location that I'm interested in. That's my buyable dip. It now becomes easier because I started with what's the trend. Find the obvious trend. And to do that, you want to look back at about 12, 15 months just to make it easy from a visual point of view. Where are we? Let's take a look at Marriott Hotel. Okay, so there's one that's probably not going to work out for me. It doesn't look great. I've got to eat it. I've got to take the rough with the smooth. It looks like it's going up. It has been in a brief consolidation in the middle of the chart, but broadly speaking, it's going back up. And maybe you can see as it went back above the 50, I've got to take my own advice. Very briefly, it did go above the 50. It's selling off below. I'm not worried about it. Nothing I can do about it. I've got to follow the process. I've got to take the rough with the smooth. This is probably going to end up losing me some money. But you know what? Because I've traded with options, I've got usually 100 days to expiration. I've got plenty of time on the clock. I don't have to worry about being stopped out. I don't know how that gives me like a little bit of peace of mind because of the way that, let me say that again, because of the way that I use stock options. I'm not buying stock. I use a stock option as a proxy, an alternative for trading stock. It means that I have a built-in stop loss. If your options are new to you, the best way of thinking about them, if they are brand new, is it's just like a deposit. What's the worst that can happen is you lose your deposits. So it's fixed risk. So I don't have to worry about stop loss in the traditional sense. I can pop my trade on. I've got 100 days to see if it's going to work out. So yeah, this one's underperforming right now, but I've got plenty of time to see if I can manage it more effectively. Maybe I'll take a break-even trade in the new year. If it turns around between now and the end of the year, I'll probably close it for a break-even trade because it's underperforming. It's not doing anything interesting because the trends like that, they should be pretty fast and furious on this chart. They should be moving above the moving averages and away from the moving averages. It's not doing it. So if I can manage that trade more effectively sooner rather than later, then I will do. But I've got time to do it. So I don't need to worry about it. So this is probably going to, excuse me, this is probably not going to work out for me. That's just the way it is. So far we found one that looks interesting. Halliburton, already in that, don't need to do anything. We've got BHC, bearish trade, going down. Thank you very much. We've got BBWI, looking good. And where was the other one? Oh, yeah, Jeffries, also Bible dip, waiting for it to turn around. Marriott, not so good. For New, if it wasn't already in a trade, it'd be the same deal. Waiting for price to turn around, probably above $160, somewhere around there. If it wasn't already in a trade, that would be where I'd be looking for a trade. It's not anywhere close, so I don't really have to worry about that anytime soon. Let's finish off, and then we'll wrap up. And as I like to say, we'll land this plane, we'll dock this boat, however you want to phrase it. Nvidia, lovely trend. It is a good example. There's the range, multiple crossing the average price, pinging and a ponging, flipping and a flopping. Got the breakouts. There's what the breakout looks like. Rally, retrace. So it goes from range to trend. We buy the dip, rally, retrace, buy the dip, rally, retrace, buy the dip. So if it goes back above, say, 320, back above the 20-period moving average, about $320, then I'll be entering into my buy the dip opportunity. So again, Nvidia looks really good. What else we got? Let's try OSK. Again, direction is a little bit mixed. Let's just mark a big box on it. We've got the multiple cross on the average price. Not really a trade right now. Don't need to worry about it. Come back next year. Starbucks, flipping on a flop, and price is ranging. It looks like it's starting to do something new. It's starting to move out of the consolidation. Maybe I can consider a breakout. Don't need to worry about it today. I can certainly look to doing something with it in a few days' time if I choose to. Again, for holidays, all the reasons that I mentioned earlier, probably not worth worrying about. Let's finish off SQM. Again, it's a little bit rough around the edges. Brand new trend, retracement. It's not going anywhere anytime soon. So, above $60 would be interesting. It's a little bit sloppy, a little bit messy. Maybe I just leave it alone, come back in the new year. All the reasons that I mentioned earlier. Look for certainty, look for obviousness. WCC, rising channel. So we've got the moving averages are stacked, but also at the same time, we've got this multiple touches of the highs. So again, it's in a rising consolidation. Price coming down to the rising range low. So I can be bullish at the range low if or when it gets there. It's not there now. I don't need to pay attention to the moving averages because remember from earlier, I'm going to default to calling this a consolidation. So a couple of stocks that look interesting, a couple of stocks look really interesting for that matter. I'm not seeing anything that I need to get excited about that I'm not already in. From do I need to place the trade today point of view? I've already got exposure to several of these stocks. As you saw, one or two of them look interesting. but probably don't need to worry about them today. And keep an eye on them, maybe next week. And just think about the time of year, 17th of December. Next week, we're thinking about Christmas. Do we really want to be glued to the screen looking for an entry? If you're not already in a trade, I wouldn't worry about it. I'm personally going to be looking to manage trades. But if you are looking to, again, each their own. Some of you want to trade through Christmas. That's your right as a retail trader. You know what I'm doing. Probably not going to be looking for anything new until the new year. But with that said, there's one or two stocks that do look quite interesting. Let me just go back through them again very quickly. Apple could be a Bible dip in the next few days. It's not right now. ADS looking like a breakout. BBWI looking like a Bible dip. BHC is a bearish sell the rally in a downtrend. CLF is buy range lows. Domino's Pizza is buy the dip. That's technically already fired off. I'm already in this trade, so I don't need to worry about taking a new entry, but it has technically fired off today, so that's brand new. Halliburton, I'm already in this, but it's at the range lows. Jeffries, again, Bible dip. LNG, Bible dip. MAC, probably not worth talking about. MAR, again, looks a little bit sloppy mess. I'll probably just leave it to the new year. Nvidia, it's a Bible dip. OSK, no trade. Starbucks starting to look like a bearish breakout. Again, it's not today, but could be interesting in a few days. Looks horrible. SQM looks horrible, looks messy. Leave it to the new year. WCC, rising channel. It's not at the range low. It's not at the range high. Leave it alone. So a couple of trades look good, look interesting. The recording for this will be up on the YouTube. So if you need to press pause and take notes, you can do later today. But nonetheless, that is my stocks in review, my teeny tiny portfolio of stocks that look interesting. Several of them do, several of them don't. One or two of them look like they're worth taking action on sooner rather than later. Again, if you're looking for a trade, then there are one or two that look interesting. What you don't want to do, which is one of the things that I said earlier, you don't want to be a zombie trader. You don't want to be sat here all day, every day. So if you're not seeing anything exciting, don't go looking for it. Don't go hunting for it. Just go and enjoy the time of year. Spend it with friends and family. Go and enjoy yourself. But trying to look for my little clues. Right, so there we go. So what was your biggest takeaway today? Anything interesting? What caught your attention? Again, some of last week's comments. So what was your biggest takeaway today, folks? Anything interesting that caught your attention from my stream of consciousness of whatever came through my mind as I was looking through the charts? So what was your biggest takeaway today? Anything that caught your attention? Patience, absolutely, Ruben. Yeah, patience. Good info. Oh, thank you very much for your kind feedback, Steve. Just good info overall. Absolutely, Perry. Yeah. I mean, I think when you simplify everything, the reality is, and I've said this a few times in the past, Perry, I used to trade 34 different types of consolidation. I counted them up one day and I kind of stopped counting at 34. There's probably more. I could probably get to 50 of different named patterns. And I spent so much effort and energy trying to name the pattern before I had the realization it's just a consolidation. Let's stop worrying about the name of it, because we'll find out next week or next month or next year what it was called. We only know the name of these patterns afterwards. So I think when I started to focus on what's the phase of movement, is it trending or consolidating? Is it going up? Is it going down? I think when you do that, it just makes it, again, I'm not going to lie to you and say it's easy, because it's not. What we do isn't. It truly isn't. There is a steep learning curve. I've never shied away from saying that, but it becomes easier when you stop stressing about the name of it, because every pattern has got its own set of rules, its own set of parameters. It's traded slightly differently. And the reality is it's just another consolidation or the two trends. So yeah, 6 patterns. I had a lot of personal breakthroughs in my trading when I simplified it down to that and stopped stressing over the name. So I'm glad that you, again, take that away from it. All right, folks. Well, it's been interesting. Thank you for your time and attention. As I said earlier, this is probably going to be the last one this year. You may still get a few email notifications. I'll check them and make sure that they're not going out, but we will be resuming in the new year. I may even surprise us with I used to do Christmas lectures. I'm not sure I've got time this year. I've got a little bit of a full dance card this year, but I'll get through the weekend. I'll see what happens. But nonetheless, they will be continuing into the new year. So once again, yes, thank you for your time, your attention. We could all be doing other things with our time, so I just want to give you just a moment of gratitude and appreciation because without you, I wouldn't be here. So thank you for keeping me honest and paying attention and being involved with these weekly open sessions. If you've got any value from the session, please feel free to share and introduce it to at least 2 people that need to hear anything that we're talking about. And what I'd love each and every one of you to do is to just take action. If you've got something from today, if you had a little personal aha that you didn't want to share, but you still had one nonetheless, put it into action. I think the easiest thing that you can do is to practice what we're doing here. Don't just watch me do it. Take notes, see something that you like, and then go and do it, go and implement it. If you do need some help with that, as I mentioned earlier, you are invited to work with me. There's no pressure. If you want to, it's here. I've been doing this a long time. I help people get results. And if you want to accelerate your own results, I do offer a group training program. You can go to my website, AntiVestor.com, for information about it. And there's a link in most of the emails that you get from me. So just click the link. And if you want to learn more about it, then you can do. And if you don't, that's cool as well. So yeah, when you're ready, let's do it together. There's the link. There we go. That's what I was looking for. So if you want to, it's there. If you don't, that's cool as well. But just go to the main website, AntiVestor.com, and there'll be some extra information about what we're doing here and the bits and bobs that are involved. The latest thing, though, again, just a little bit of show and tell to finish off. I'm very proud of this. Hardest part for me, because I'm not technically minded, is getting these things coded up and finding a programmer that kind of understands me. Because again, I'm not a technical person in that regard. I'm not saying that. Despite that, I'm pretty smart, but I'm just not smart in that way. But nonetheless, we can see we've got the algorithm in the background. But Steve, I think I've already sent this over to the community. You'd be really interested in this. But we've got the targets. We've got the entries right here. We've got although not really trading with stop loss in the traditional sense, you've got a stop loss level marked off. But yeah, it's firing off all the trades for you. Some trade management along the way. You can see some yellow dots there. Basically bring your stop loss up to that point, essentially. So you've got all these good things to help you with the charts. Again, I think some of the questions that you sent me privately, Steve, were in relation to that. So I'll get you some of those answers after I've stopped talking here. But honestly, yeah, I'm very proud of this. The next version of this, the chart assistant. So we've got a visual tool. So fires off the entry. You've got your trigger bars, everything we just said. It goes back above the 50-period moving average, pop the trade on. So it fires off the trade. You've got your entry there, marks it off on the margin. You've got your target there, marks it off on the margin. So you know where the price is. But the next thing is in the watch list. So the next phase of this is to have all these boxes replaced. So instead of just saying where's price in relation to the trend, it's going to work out the same thing. It's going to put all the details here on the left for you as well. So instead of you putting it manually in a spreadsheet, it's going to work it all out for you. So that should be quite interesting. That's going to be probably ready, again, because of the holidays, probably going to be New Year, after New Year in the next couple of weeks. But nonetheless, as soon as it's ready, it'll be rolled out into the community. So I've already passed off the chart version. So you've got like a little visual cue to help you with your trade assistant. And then we'll have a watch list version, so we should be able just to look down the charts and go, there's a new trade, there's a new trade that needs managing. It's just going to help speed up the process a lot more efficiently. It's going to be more production line. I think I've got a mock-up of what it would look like, just so you know. Bear with me. So where's the mock-up? Where are you? There we go. Okay, so it's very much a mock-up. I did it on a spreadsheet. As you can see, I'm not technical, but it's just going to work out. There's a new trade, there's an active trade, there's some trade management, it's closed, and resting would be that there's no trade, there's no trend. But yeah, it's just going to work it all out for you, which is pretty cool. So that's coming down the pipe. Again, everyone gets access to the tools inside the members area, and they are ready when they're ready. So you got the first version of them, the chart assistant, and the watch list. What should we call it? Watch list manager. That should be there for you as soon as it's done in the next week or two. So I'm quite excited, very pleased with that. No extra charge for that at the moment. If you're in now, it's all free and included. I may charge for them in the future. Ooh. Right, back to the slides. Let's land the plane. Folks, once again, thank you for your time. That was just reviewing some stocks that look interesting to me. From my best of the best stock list, my top 25 stocks. They are good performers. They consistently produce results. I don't see anything that needs doing immediately. There's 3 or 4 stocks, as we saw there, that look potentially interesting if you're looking for anything new. For me personally, I think I'm just going to be managing trades going into the new year, and I'll take it from there. So thank you for your time. Thank you for your attention. Hopefully you got some interesting stocks that could be interesting for you if you are looking for anything. And with that said, have a great weekend. I may see you next week, to be confirmed. But nonetheless, if I don't, have a wonderful holiday, festive period, whatever you celebrate. But make sure you spend it with time, with friends, with family, with loved ones. Just enjoy yourself and put some time aside for the things that are most important to you. Obviously, thank you again for spending some time with me this week again. And I'll see you all maybe next time. Bye for now.